Apex was the or one of the pioneers around fractional shares for equities and fixed income. And the idea came from our customer. And I say our customer, there was one client in particular that came to us and said, hey, could you do something with this set of shares? Can you do something with dollars? Right, which is, go back to the symbiotic relationship between a SoFi and an Apex. Our job is to make them look amazing, right? And listen to the customer, right? A novel thought. But this client came to us and said, hey, what do you think about this notion of fractional shares? And then the question is, okay, what do you do with this? And the reality was we could build the technology behind the scenes. You still have to go to market and buy one share, 2 shares, 5 shares. The market doesn't recognize a fractional share. But at Apex, I could take in that, I mentioned a $50 order in Tesla.
This is the FinTech One-on-One podcast, the show for FinTech enthusiasts looking to better understand the leaders shaping FinTech and banking today. My name is Peter Renton, and since 2013, I've been conducting in-depth interviews with FinTech founders and banking executives. In this episode, I am delighted to welcome to the show Bill Capuzzi, the CEO of Apex Fintech Solutions. Now, if you've opened an account with Robinhood, SoFi, or Betterment, or dozens of other fintech platforms, you've likely encountered Apex behind the scenes. They're the custodian and clearing firm powering the investment accounts for close to 25 million people today. Bill shares his fascinating journey from environmental scientist to leading one of the most important infrastructure players in fintech. He explains exactly what a clearing broker does and how Apex helped democratize investing by enabling features that we now take for granted, like opening accounts in seconds and buying fractional shares. We dive into their work with crypto and stablecoins, their global expansion plans with State Street, and how they're using AI inside the company. It's a rare look inside the critical plumbing that makes modern fintech investing possible. Now let's get on with the show. Welcome to the podcast, Bill.
Good to see you, Peter.
Great to see you. So let's kick things off with a little bit of background. I know you've been doing Apex for quite a while now.
Forever.
But I'd like to hit on, just if you could just go back through your career, hit on some of the highlights.
Yeah, sure. So I'm going to sort of show my age. This goes way back to the 90s. I came out of undergrad, a mountain of debt, and I really wanted to become a doctor. That was my sort of life's mission. But the reality was mountain of debt coming out of undergrad, and the notion of taking on even more debt going to med school was just sort of overwhelming. And so I took a job as an environmental scientist and quickly realized that was not my calling in life. So I had an environmental science degree because I had to get my med school requirements. And so I needed to make some money, start paying the bills, and I found myself as a scientist. Quickly learned that was, like I said, not my calling. Still had that mountain of debt, and I stumbled into an opportunity to go work at a local university in New Jersey, at Rutgers University. And the reason I took that job was that you could go to school for free if you worked at the university. And so what does a young guy do that doesn't really know what to do with his career, still has a mountain of debt? You go get your MBA for free, which is exactly what I did. Finished, like I said, in the late 90s. And still had that mountain of debt. Live in the tri-state area. Had a roommate from college whose dad worked for a firm called DLJ, which I knew nothing about finance. But his dad said, "Hey, why don't you come work with us? We have this MBA program. See if you like it. And at a minimum, you're going to make a bunch of money. You can help pay down that debt." And so I did. I took that job way back when. And fell in love with this kind of wacky world of finance. And in particular, fell in love with sort of the back end of the industry. So DLJ was an investment bank back when it eventually got acquired by Credit Suisse. DLJ owned this firm called Pershing, which if you're in the industry, Pershing is kind of the OG of custody and clearing. It was around, has been around forever. And DLJ owned the firm at the time as this young web pioneer, freshly minted MBA. I found my way into Jersey City, New Jersey at this company called Pershing, which I had never heard of in my life. And like I said, fell in love through that experience at the back end of the industry. I left there to help found a company in New York called ConvergeX, but still had this kind of desire to get back into the plumbing side. ConvergeX was building algorithms for hedge funds, and ran into the folks at Peak Six, Chicago, back in 2014, and they had this little company called Apex that they had acquired the year before. Didn't really know what to do with it, so I tried to buy it from them in 2014. Unsuccessful, but the founders of Peak Six, Matt Holsizer, Jenny Just, convinced me to come across and help run this little firm called Apex now a little over 10 years ago. And I promised my wife, Peter, 2 years. I'll do this for 2 years, and then I'll go find something else to do. And here I am, 10 plus years later.
So then what did Apex do when you acquired the company, or when you first became CEO? There was a very different environment back then. What were they doing?
Well, let's start with why I was attracted to it. So you think about custody and clearing for the audience. That sort of, think of, like I said, the back end of the inchworm of sorts. So everything from account opening, funding accounts, confirm statements, tax, cost basis, settling trades, all of the plumbing behind the scenes for a retail investor. That's what a custodian or clearing firm does. And from my time at Pershing way back when, I knew how valuable it was for firms to do this right. And fast forward to today, there really are just a handful, less than 10 firms on the planet that can do retail custody and clearing well. And so back then, saw an opportunity to sort of jump in. And at the same time, think back 10, 12 years ago, it was sort of the start of fintech in retail wealth. And so here you have this kind of fintechy custodian, which doesn't look like Schwab, Fidelity, Pershing. And you have these clients that are showing up at our doorstep like Wealthfront and Betterment and Robinhood, looking for a partner that didn't look like Schwab, Fidelity, Pershing, right? That was leaning into technology and trying to come up with things like opening an account in seconds with no paperwork. And so I want to say it was brilliant strategy, right, on my part, but it was also a lot of luck, right? It was like right place, right time with the right product.
Right. So when Robinhood and Betterment and those when they were all getting going, obviously they weren't initially. They were quite reasonably small companies. How did you kind of convince them that you? Was it just that you, like you said, you weren't Schwab or you weren't a big guy? But how did you convince them to trust you? Because this is like fundamental to their business.
Well, if you think about it today, Peter, I think it'd probably be a different conversation. But you're going back, let's call it 12 years ago. There was no other alternative. Okay, so they could try and build on top of one of the competitors that was out there, but the reality is those competitors didn't have the technology needed to power what they were needing, right? What they were looking to do, which is, how do I open an account in seconds and do it at scale? How do I support a client that has $500 in the account? Not $50,000, not $500,000, but $500. And how do I take each piece I mentioned before, account opening and funding and confirms and statements, cost basis, tax, and how do I do it all in an app on a phone, right? Mm-hmm. And, we take it for granted today. Here we are, 2025, going into 26. But back in 2012, 13, 14, there really weren't a lot of those types of opportunities. And, the second part I would say is they were builders. They were all builders. They thought about the world through this lens of they're going to build a product. And Apex was sort of built. It was an API first, right? We continue to be today, but an API-based platform, which think back 2012, we were a one of one, right? And fast forward today, in large part, we are, continue to be that sort of one of one that uses APIs as kind of the way that we kind of lean into wealth.
Right. Okay, so before we dive more deeply into this, I do want to get a sense of exactly what is involved with what a clearing broker does exactly. Like, I get opening an account, but maybe you can just take us through. Someone is, depositing money into Robinhood or whoever, and then conducting a stock trade. What is it that the clearing broker does?
Yeah. So think of it as the sort of proverbial man or woman behind the curtain, right? So this is where there's this amazing symbiotic relationship. So SoFi is a client of Apex today. Okay. So what ends up happening is SoFi focuses on the UI, the UX, the end client experience. That is their focus, right? How do I put something out there that an end consumer finds attractive? So they control the B2C side of the relationship. Behind the scenes, so Peter comes on to SoFi, pull up the screen that says, "Hey, Peter, you want to open an account?" Yes. Great. You type in your information and you press go. So what that does now, they capture that information on their front end, and it fires through real time through an API to Apex, where we take Peter's information and we real time interrogate that against a number of sophisticated databases to ensure that we pass all the OFAC and KYC, AML requirements. And immediately, assuming you are who you say you are, we're going to pass back an account number and say, "Peter, you're good to go. Account open in seconds." Right. The second thing is, okay, now Peter says, "Account's open. I want to actually move money in." Same thing. You're on the SoFi screen. You type in your bank information. Apex is now going to grab that bank information and make a real-time connection between, let's just say you're a Bank of America client, and now this newly opened SoFi account. Okay, so now open the account. You've now funded the account real time. So money's moved directly into that account. I want to buy $50 worth of Tesla. Okay, so third step, all real time. This is all happening right in sequence. You put in an order, $50 that you've now moved into that account, and I want to buy a fractional share trade of Tesla. I'm not going to buy shares. I'm going to buy $50 worth of stock. Again, you go onto SoFi, you put in the order, you pull up the ticker, and that order now fires through to Apex. I then take it to the market. I get it executed on behalf of SoFi and you as the end customer. And now real time, you're now looking in that same SoFi account you just opened, and boom, there's your shares of Tesla, right? Fractional shares, $50 worth of stock. Once you do that,
okay.
Yeah. So then once you do that, you have to get a confirm, right? It's a requirement in the United States to get what's called a 10b10 confirm. You're going to get a statement at the end of the month because there was a transaction. You have a tax report right at the end of the year. So all of those things is what a custodian does, a clearing firm does on behalf of SoFi or Stash or Webull, and they do it on behalf of an end customer.
Right. Okay. That's very helpful.
Yeah.
Thank you. So then fractional investing, like fractional shares, that was not a thing. I don't know when it was probably in the late 2010s, I'm guessing, when that came in from memory.
That's right.
But when you would have started working with like Robinhood and stuff, I don't think that was a possibility. So how was that transition to get into? Before it was you had to buy a whole share. Like if you wanted Berkshire Hathaway, you had to plonk down six figures if you wanted their Class A shares. But tell us a little bit about the technology that was needed to bring fractional share ownership.
Well, I think the first part of it is, where did the idea come from? And Apex was one of the pioneers around fractional shares for equities and fixed income. And the idea came from our customer. And I say our customer, there was one client in particular that came to us and said, "Hey, could you do something with this set of shares? Can you do something with dollars? Right, which is, go back to the symbiotic relationship between a SoFi and an Apex. Our job is to make them look amazing. Listen to the customer, right? A novel thought. But this client came to us and said, "Hey, what do you think about this notion of fractional shares?" And then the question is, okay, what do you do with this? And the reality was we could build the technology behind the scenes. You still have to go to market and buy one share, 2 shares, 5 shares. The market doesn't recognize a fractional share. But at Apex, I could take in that, I mentioned a $50 order in Tesla. I could go to the market and buy, let's just say, the equivalent $50 was going to buy you 2.2 shares. I'll buy the 3 shares from the market. I will then attribute 2.2 shares to Peter, and the other 0.8 of the share I'll hold in inventory, right? Until the next person that wants to buy it, and I'll use those shares to fill somebody else. So it was about building some pretty sophisticated technology. You're talking about now 10 years ago. It's obviously evolved since then, but 10 years ago, it was complicated to do, right? And that's sort of the ethos of Apex, is lean into hard problems using technology, right? And then, be able to provide that out to the 250 clients that use Apex as that custodian clearing firm.
Right. Okay. So, it's interesting because I do see the Apex name around quite a bit when I'm, I have lots of accounts at different fintechs, and it's one of the reasons why I wanted to do this interview, because I keep seeing you around. Like I just recently moved my wife's 401k over to public, and sure enough, there was Apex had to make out the check to you guys when we took it out of the 401k. But most people don't know who you are. Yeah. Like, you're not a retail brand. Yeah. I mean, how have you kind of built your brand so the players that are important to you know who you are?
Yeah, I mean, it's tricky. And it's tricky because really our job as a platform, think of us as a platform no different than like a Shopify, right, is really to make, you mentioned public, to make public look great, right? And so as this platform, we really sit behind the scenes and enable that brand, public. The tricky part about it, though, Peter, is you mentioned your wife. We hold her money. We're the custodian. We actually are responsible for your wife's account on our books. So the cash and the securities are actually held within Apex, right? And so I think there's a desire on my part, and I think in the firm's part, to continue to build that brand, in large part because today we have close to 25 million people whose money and securities we hold as an organization, right? And so marrying that, or sort of getting that right, the mix between us being the sort of man or woman behind the curtain and supporting those B2C brands, but also having that brand that the end consumer, when they get a statement or a conference, says, "Oh, okay, I know who Apex is," right? They understand what we do as an organization. That's a work in progress, right, for us as an organization. One of the reasons over the last, whatever it is, 4 years, we flirted with an IPO, not necessarily because we wanted to raise the money, but because I feel like we have an obligation for us to have much more of a presence from a name perspective, because like I said, we have close to 25 million people that rely on us. But it's, it's a delicate balance. You think about Shopify as a good example. It's the merchant that the end consumer is interacting with. And in that case, Shopify is acting as a sort of platform behind. Same concept here, right? In terms of us supporting those B2C brands.
Right. I'm curious about, like, when you're going out there now, people, I said, most companies in fintech would know who you are, but I'm curious about whether you're actually talking with banks today, because I see some banks talking about we need to keep the customer. Let's add like a whole investment program in there. I mean, are you seeing in the last few years that more banks are interested than they were before?
Yeah, I think, as you said, there's not a fintech out there, if they want to offer a retail wealth product, that doesn't know to come to Apex, right? And so we don't miss much in terms of people that are looking to do something on the fintech side. What's happening is that success over the course of the last 10 years is now started to move into the banks and the traditional wealth providers. And why, right? The reality is, typically those banks, those wealth advisors cater to the high net worth, right? Someone that has $500,000 or $1 million as a minimum. And what's happening is the world's changing, right? And what traditionally happened in the past is somebody had small account, did it themselves, whether it was a robo or a self-directed platform. And if you got real money, you handed a check to an advisor. And what we're starting to see now is this convergence happen, where the fintechs are adding human advice to their platform. Right? We talked about Robinhood a couple of times. You can see what they're doing, which is they're evolving with their customers, and they're adding more traditional services to what was historically a fintech platform. On the other side, you're now, we're in a really interesting spot where the traditional players are catching wind of what's happening and are trying to lean hard into the fintech kind of world and adding more digital capabilities to their platform. And obviously Apex, given our background, given the history of the company, is in a perfect spot to help those banks, those traditional advisors, add a more digital solution set. And the cool part about the world we live in is it's not a winner take all. And what I mean by that is that bank or that traditional wealth advisor can continue to use Schwab or Fidelity, but add Apex as another partner, really to kind of focus on how do they help the digital channel within that particular firm or bank.
Right. I know in my research here, I discovered that Robinhood and Wealthfront are no longer using you guys. They've taken they've built their own clearing broker in-house, it seems.
Yeah.
So then, and obviously they've got massive scale, those companies. But so I'm just curious, do you see Apex as sort of an enabler to help fintech companies get, or even banks now, to get to large scale? And once they're at a certain scale, it makes sense for them to bring this in-house? Or how do you sort of view that transition?
It's a good question. I think over the course of Apex now, whatever I mentioned, 12 years, the two firms that have left and done it themselves has been those two. And then, despite the fact there's other firms that are, as large, maybe not as large as Robinhood, but, certainly larger than Wealthfront, that have stayed with Apex. And part of it is, the world's changed around technology. I mentioned that before, but Robinhood sort of said, "Hey, we need to do this ourselves," and then spent over 2 or 3 years building out the capabilities. And through that time was a distraction. You think back to 2019, 2021, they ran into major issues around their platform and some of the things around meme stock. And I think today there's much more of a sort of a inclination by our clients to get to that scale and have a variable cost versus taking on all the technology. And so we built out a bunch of technology to allow them to get better scale, get better economics without having to take on all of that risk, the capital outlay, and the technology build that somebody like a Robinhood or a Wealthfront did, now going back, 7 years ago. And so since that time, Wealthfront left. Really, we had disagreement on pricing. Robinhood left in 2018, and since that time, really no one's left Apex as a result. And part of it is the technology continues to evolve. And like I said, to the extent you don't have to do this, if we do our job and we get the pricing right and provide them the ability to scale, there's no reason to take on all that back end plumbing. Right? That's the whole job of a platform.
Yep. No, that makes sense. So I want to talk about crypto, because as we're recording this, both Bitcoin and Ethereum are flirting with all-time highs. Crypto has become a pretty, a more established asset class, certainly than ever before. I've seen that you do offer services for the crypto space, but
Yeah.
is this a really small part of your business? I mean, are you leaning into this? Where are you at with crypto?
Well, I think start with we say crypto. Let's put a broader bucket, call it DeFi, decentralized finance, and then within DeFi, I think of it as in kind of three buckets. You have stablecoin, right? So we talked about funding rails. So now let's get outside the U.S. and start thinking about other countries. People using stablecoin. Let's use USDC as a means to fund a brokerage account, right? So on ramps and off ramps. So that's kind of one part that we're leaning hard into, and we offer the ability for people to use stablecoin to fund their brokerage account. The second, like you said, is investable asset, crypto. I want to buy or sell Ethereum or Bitcoin. And then the third one, which is sort of emerging now, is this notion of tokenizing a security. Right, taking a public security, let's use, we mentioned Tesla before, and actually creating a digital form on the blockchain of that public security. So Apex, again, as this platform, our job, think about crypto as just another investable asset. And our, sort of job now is to how do you integrate that in a safe, secure, kind of compliant, from a law and regulation standpoint. Do it in a safe and secure way on behalf of our customer and then ultimately the end customer. And I think it's interesting, Peter. So I've been at this a long time. So we built out Apex Crypto 2019 and sold that business to a public company called Backed in 2022. And why? Why do we do that? The regulatory regime, it's pretty amazing to watch the sort of how things have evolved. But, under Gensler's sort of regime, you couldn't touch crypto with a 10-foot pole, right? And the risk for us, as I said before, safety and security is the kind of number one sort of mantra for the firm is, the risk in and around crypto as an investable asset in 2022 was very high. And fast forward to 2024, we have a change in office in DC, and we're off to the races again, right? And what changed? It was obviously a regulatory or governmental change that then would sort of kicked off a change at the SEC, and crypto has kind of burst back on the scenes ever since. As a practitioner, as a sort of sitting in my seat as CEO of Apex. It's an investable asset, right? What you need to do is make sure that the FTXs, those situations that did happen through that period don't reoccur, right? And make sure that there's safety and security and that there's framework, which I do appreciate by the U.S. government saying, hey, we're not going to stick our heads in the sand, but we are going to create a framework around this to make sure that we protect the investor. And so we end up in a position today where I think that, like I said, USDC or the stablecoin as an alternative to the current rails. Think about real-time payments. Right today, ACH is not a real-time, or FedWire is not a real-time system. Stablecoin, sending money over stablecoins is a real-time payment mechanism. So it's a really viable alternative. Buying crypto assets as an investable asset is good. Like I don't know if you have kids, Peter. I have young kids who are looking, ways to differentiate and invest. And I keep telling them that, some percentage, 5 to 10% of their portfolios as a 23-year-old should be in and around, DeFi, around crypto. And then last part, which I think is really interesting, is to watch the evolution of this tokenization of securities. Right, there's rules and regulations that don't allow it to happen in the U.S. today, but I do think what I'm watching down in D.C. is that we'll continue to see change that's going to allow for more of this over time. Right? How does that manifest itself? Think, Peter, today you buy a security, we settle that trade T+1. So that means that you bought the security today, it actually doesn't settle for 24 hours. Using tokenization, using blockchain, will allow us to real-time settle, right? So you buy it instantaneous, just like you would on, you bought Bitcoin or Ethereum.
You primarily just operate inside the US, right? Do you have international companies that, because I mean, obviously it's different countries have very different laws when it comes to clearing and that sort of thing. So are you really focusing just on US companies?
So we support we have clients in about 170 different countries. So now the reality is most, if not all of those people want to invest in the United States. So
right.
the
So
biggest
it's
part of
US securities.
that's right. The biggest part of our growth as a company has come from outside the U.S. And I'll give you an example. Brazil, right? Almost every one of the large banks in Brazil uses Apex for their sort of mass affluent type of client, right? So everything's on a phone, and they needed sophisticated APIs. They came to Apex for those types of solutions. So a huge part of our growth is coming from outside the U.S., meaning international clients that want access to the U.S. market. We recently, I think the second part of it, which is on a go-forward basis, we recently announced a partnership with State Street, and that is to take Apex and make it global. Right. So today, predominantly, we settle. We do all those things I talked about: custody, clearing, opening accounts, and funding, and all those for the U.S. market. State Street has local settlement capabilities in about 100 different countries outside the U.S.
Wow.
And so we can take our platform and then partner up with State Street's local settlements and sort of take our show on the road of sorts, right? Do what we do here in the U.S. and provide those type of capabilities to places like Spain or Italy or UK or Hong Kong or Japan. And that's the plan over the next probably 12 to 18 months.
Right. And I imagine with like the whole like USDC type thing, if you said you're working with Brazilian banks, a lot of Latin America uses stablecoins USDC. So am I correct in assuming then today someone can move USDC into their brokerage account in like Latin America, for example, and then start trading US stocks?
Exactly right. And that's where, back to the fractional share part, Peter. Same concept with stablecoin. It was driven by demand, and almost exclusively from people outside the U.S. that are already holding USDC. And what they wanted was to use that without having to sort of do the conversion themselves and then take the cash and move it in. Why couldn't we just take the USDC directly? And so over the course of the last few months, we sort of built out the capabilities to be able to support that.
Right. Okay, so I do want to touch on AI, although we're running out of time. But I want to make sure I'd like to get your thoughts here because there's a lot of things happening in the AI space around self-driving money and like agentic payments and managing your money in an automated fashion. Now we're a long way, I think, from actually making that all a reality. But I'd love to kind of get inside Apex. What are you doing to prepare for an AI-enabled future?
Yeah, so we have, which is pretty neat, we have about 870 experiments and counting inside of Apex.
Wow. Okay.
And, I say it all the time to my team, which is if they think I'm going to walk in and sprinkle AI pixie dust over the firm and things are magically going to happen, it's just not the way it works. Right. And it really is that each person within the company, we got 1,000 people, they know their corner of Apex better than I ever would. Right. Part of it is AI is a tool, right? It's a capability, right? And you need to be able to obviously provide safe security. You got to put the framework around the tools. You have to teach people, right? And then it's, get to work, use the tools. And so there's lots of conversations in our industry around products, like you mentioned, around, hey, AI co-pilots for how to make investments. And I do think they're moving a lot faster around those types of products than probably both of us know. But at the core of these companies is how does it just become part of the fabric of the firm? And so probably one of those experiments, probably the biggest experiment, I say experiment, but one of the biggest initiatives inside of Apex is that by the end of this year, 50% of all code written in Apex will be written by AI.
Mm-hmm.
I mean, that is incredible, right? When you think about, and we're builders. We have, 600 plus engineers. And it's not about, hey, I want to cut 600 people to 300. It's I want to make those people even more effective in building product and delivering solutions. And so to the extent that you can lean into these tools at the core of your company, right? Something like how do you actually use it to become more effective and efficient in delivering amazing products? That is sort of where to start. All of these things around products around the edges and how do you become more effective or how do you capture notes? They're all cute, right? But to me, the sort of core, especially for an Apex as this platform, is how does it actually help you become more effective and efficient in delivering great solutions? So 870 some odd experiments. And the cool part is, you can't walk around the firm without AI being part of the conversation.
That makes sense. Okay, so last question then. I mean, you joined Apex. You said it was going to be a couple of years. It's been now over a decade. So what are you most excited about for the future of Apex?
Yeah, there's a famous quote from Jeff Bezos around, are you a mercenary or a missionary? The mercenaries are ones looking to, you're a private equity firm, you're looking to get a 3x on the original investment, sell the company, move on. Missionaries believe in the purpose, right? And if you asked any person at Apex, if you run into somebody, Peter, or someone from the audience runs into an Apex person, ask them, what is the purpose of your firm, right? And to a person, they'll respond that, help every person on this planet invest. And so while I'm proud of the fact that we've got close to 25 million people that use our platform, think about all the people out there that don't, right? That haven't had the ability to invest, right? When we start thinking about India and China, we got a long way to go as a sort of industry. And so the thing I'm most excited about is sort of continuing to do the things that we've been doing to help people on this planet invest. And so if you rewound the tape to when we started, you couldn't open an account with $500 in it, right? The products that were available to an end consumer were really tilted toward the rich, right? I think, 12 years later, I'm proud of the fact that Apex has helped, it's overused term of democratize investing, right? I think all the things that we've done in partnership with the Wealthfronts and the Robinhoods and the Stash and SoFis, right? We pulled some pins in this industry and helped lower the barriers, but we have a long way to go, really long way to go. So, keep doing what we've been doing, right? That's sort of the mantra inside the company. It's listen to the customers, do creative things, right? So, we launched 24-hour trading. So you can now buy equities 24 hours a day through Apex, 5 days a week. All right. The next piece is how do you add Saturday and Sunday? Right. How do you offer options overnight? And that's from our clients telling us, hey, these are the things that we think would be interesting for the end customer. So yeah, the long way to go. Part of it is we got to keep listening, keep building amazing technology.
Okay, well, that's a good place to leave it, Bill. Really, really appreciate your conversation today. What an interesting company that you have created here, and it's important. I think giving everybody access to the tools that are only available to the wealthy. I mean, that's really what fintech's all about. So, congratulations on your success today.
Thanks so much, Peter.
See ya.
Thanks for having me.
When we stopped recording, Bill and I were chatting about our kids and how different the world is when it comes to investing than it was when we were young adults. The technology Apex has been able to develop has truly democratized investing to the extent that anyone can get started. Want to invest $5 a week in Tesla, Bitcoin, or the entire US stock market? That's no problem today, thanks to the work that Apex pioneered. Now, I haven't seen hard numbers, but I expect many more young people have brokerage accounts today than they did 10 or 20 years ago. This access alone will enable more people than ever before to participate in the wealth creation engine of major asset classes like the US stock market. Anyway, that's it for today's show. If you enjoy these episodes, please go ahead and subscribe, tell a friend, or leave a review. And thanks so much for listening.